Westpac tightens credit, and banks defer loans. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. I have my stein of coffee, and I thought we'd have a look at two articles. One discussing Westpac tightening credit for the self-employed, and the other just looking at the number of loans that banks have deferred. And I'll sort this out so we can actually see what we're going through. So, Westpac is tightening borrowing capacity for self-employed customers and people living in areas that are dependent on tourism, a move aimed at reducing risks sparked by the pandemic. Now, here's the thing, guys. This here, reducing risks, this is the business of banks. This is their business. It's about reducing their risk, maximizing their profits while reducing their risk. So that's why, when they're being so nice and giving everyone these mortgage holidays, I am a suspicious and cynical bastard. I think it's all to do with them reducing their risks and nothing to do with them taking care of us. Because just imagine what would happen if people started defaulting left, right, and center, if arrears were growing and people were forced to sell. What do you think would happen to all those properties that are considered the bank's assets, also known as all the mortgages we have that have LVR, loan to value ratios that will go into negative? What do you think would happen to the bank then? Well, it's not a pretty picture. So that's where I would argue that their behavior now is in their own best interest. I've heard enough horror stories of banks to, be pretty confident about that statement. The country's second biggest bank on Monday said self-employed borrowers taking out new loans will be allowed a maximum loan-to-value ratio of 80% or 85% for some medical workers, including doctors, dentists, vets, pharmacists, and optometrists. Pharmacy is an interesting one. I know a lot of people that have just been very frustrated at that profession. Chemist Warehouse has just kind of slammed the profitability of it. Let me know if you know any pharmacists. I had some pharmacist clients that just sold out, got out. Previously, the bank had allowed owner-occupiers who are self-employed to borrow up to 95% of a property's value or 90% for property investors. The banking giant will also introduce a LVR cap of 70% for new loans in postcodes in tourism-heavy areas, mainly in Queensland. With recent changes to Australia's economic outlook due to the pandemic, we will be making some temporary adjustments to our home lending criteria, a bank spokeswoman said. Now, we have to think about this, guys. Remember, there are people saying that we're going to go back to a V-shaped recovery and property is shooting right back up again. Do you think this will affect the capacity of that? Property to shoot right back up. Property to not take a hit. People not forced to sell. What happens if you're self-employed and you've got an LVR of 90% and then it gets worse on your investment property? It goes to 95 because the property value drops down. Well, you get a phone call from the bank saying, sorry, you don't meet our risk criteria now. You need to sell. Or you need to increase or pay down your mortgage by such and such. Do you think that'll happen, everyone? Do you think that will happen? I bet you it'll start happening in 6 months. Just by implementing things like this, even if it's not meant to, a little box will trigger in a computer system, and you get all these people, we'll be reading about it. Let me know what you think. Do you reckon there's a risk? These updates will help reduce risk for home loan applicants in some affected industries and areas through measures such as lowering maximum loan-to-value ratio. The bank, which in its recent profit results made provisions for bad loans based on a 15% fall in house prices, said the changes will be temporary. The effect of the changes will be to require borrowers to stump up a bigger deposit to borrow the same amount, although in the current condition home buyers may be less keen to take on the maximum amount offered by banks. In a sign of tighter mortgaging credit for smaller banks, Bank of Queensland also said it would require more detailed information about home loan applicants' income from bonuses, commissions, or investments when assessing loans. A note to brokers from BOQ said the changes will be temporary and were a response to the uncertainty created by the pandemic. Mi Bank also told mortgage brokers it would temporarily introduce changes that result in the lender assuming certain types of income, including bonuses, commissions, and penalty payments, are treated more conservatively in applications for credit. Well, there you go. So we can see here they're starting to tighten the reins on the free money. They're managing their risk, guys. Even though the cash rate is at insanely low levels, they are managing their risk. What does that tell you about the bank's confidence for the economy? So let's have a look at another article now. And this one, sent to me by a viewer, is from savings.com.au. And banks have deferred 100,000 loans in the last week alone. Banks have deferred an extra 100,000 loans, including 50,000 home loans, in just last week to help customers through the pandemic. So this is where we're talking about avoiding the risk of people going into arrears. And it's not just home loans, it's another 50,000 other loans as well. New figures from the Australian Banking Association show a total of 643,000 loans have now been deferred, with the total value of these new loans now over 200 billion. ABA Chief Executive Anna Bligh, is that the Anna Bligh we all know? I wouldn't be surprised. The former Premier said, I should really look it up, but someone will let me know in the comments. Said the figures revealed the economic fallout from the pandemic was still unfolding and continued support from banks was needed. New data released today showed that in just 1 week, an extra 100,000 customers have had their loans deferred, including 50,000 home loans, to take the pressure off households and business budgets as they navigate through this pandemic, she said. These updated figures, together with figures not previously reported, bring the total number of loans deferred by Australian banks as a result of the pandemic to over 643,000, of which approximately 392,000 are home loans. Now here's the thing, guys. If you defer your home loan, it's not a smart move. It's a sign of desperation. If you defer any loan, it's a sign of desperation. It means they're just tacking it onto the end. You're going to be worse off. And here's some comparison rates. Here we go. And there we go, 2.68, 2.78. There's some good discounted rates here. Let me know in the comments. I think one viewer told me he managed to get his rate, 2.89 down. I'm still pushing to get one under 3. I'm still pushing. I'll try again. According to Ms. Bligh, the total value of loans deferred increased by at least 20 billion in just 1 week. And people don't think there's a potential for property to drop. But when we start seeing forced sales, because this can't go on forever, the banks can't do this forever. These new figures released today shows banks working overtime to ensure assistance is given where needed to customers who are affected by the crisis. See, notice how they're framing it. The banks are minimizing their risk. They're trying to give people an extra lifeline so they can scrape by. Maybe people should be selling right now if they're in trouble, if they can't afford their mortgage for 6 months. Maybe they need to downsize. Maybe they don't need the McMansion. Maybe they need to move a bit further out to a cheaper suburb. Maybe they need a loan closer to this 400,000 mortgage, where the repayments aren't even $2,000 a month, aren't even $500 a week. Rather than the starter homes that are apparently 700,000. That's considered a starter home, guys. Bloody Australian property market's just nuts. The surge in demand for assistance from banks shows the economic impacts continue to be felt, and by no means is the nation through this crisis. It hasn't even begun yet. They haven't even declared a recession yet. Putting home loan repayments on hold could free up an extra $1,834 per month for a borrower with a $400,000 mortgage, according to the NAB. Wait, are they putting the whole thing on hold, not just the interest portion of it? Okay. Here's the argument I can see. If you have other debt, If you have other debt, if you have a credit card where you're paying 20% interest, and you put your home loan mortgage on hold and use that as a strategy to get rid of that other debt and destroy that, that's probably a smarter move. Well, you're essentially adding your credit card to your home loan, but it's at a lower interest. You're consolidating your debt without going through all the rigmarole. So I can understand people doing that, but the danger is they'll just rack it up right again. You got to get rid of it and you got to cut it. Throw it away. Get rid of it entirely. That'd be the only reasonable suggestion. But you can see people deferring it and then just buying more crap, can't you? Am I the only one that can see that? Oh, we'll just afterpay it, honey. It'll be fine. Oh, I need that new Xbox X straight away. Couldn't possibly buy one second hand. Gumtree's your friend, people. You know. Here's a challenge for you. Try and get free stuff from Gumtree, fix it up, sell it, and then put that extra money off your mortgage. Let's see how you go. I've been looking for building materials to renovate my house on there. It's terrible. Rachel's worried. Okay. But while the deferral of loan repayments has been welcome relief to many experiencing financial hardship, deferring repayments could cost borrowers more in the long run. That's because while repayments are deferred, interest is still accruing on the loan balance, increasing the length of the loan and potentially costing tens of thousands of dollars. So CBA approves $500 million in SME loans. $500 million in loans. The CBA has approved more than $555 million in loans for small and medium-sized businesses through the government-backed SME Guarantee Loan Scheme. Now, the viewer get in touch with me, and he was talking about a colleague he knows in business who's looking at getting a $12,000 loan to keep it going, keep her business going. But she wasn't sure if she wanted to take on that risk, that burden, because she didn't know if her business would still keep going. Here's the thing. Should you borrow money for expenses? We've had to do it on our business because we had, builders paying us very late, people just playing silly buggers with invoices. It's not a situation you want to get into. You don't want to have your money spent before it already comes in, and that's essentially what these SMEs are doing if they're borrowing for expenses. I've completely changed my whole strategy to avoid doing that ever again. But that was during good times. That was just one invoice that was pretty damn late, a pretty big one. But now, in this environment, would you do it? The scheme launched in late March, aimed to provide SMEs with quick and easy access to funds to help get through the economic hibernation brought on by the pandemic. CBA Group Executive Business Banking Mike Vancey-Lyle said the bank has helped more than 6,500 customers whose businesses have impacted by the pandemic. They're making money from it, guys. Their banks are making money from it. They're getting it dirt cheap from the RBA, and then they're lending it out to people and making money off it. The RBA is creating the money out of thin air. That's what it is, guys. This is the thing. This is why you have people hedging for inflation. Because can MMT go on forever? Will we reach the matrix point where Neo emerges and hyperinflation begins? Getting funds quickly to our customers means they have cash flow they need to pay for critical expenses like wages, supplier payments, and other overheads, he said. This is the thing. Do you want to be in a situation where your business is borrowing to pay those expenses? That's the scary thing. Because these aren't loans that are going to be forgiven. Not like the ones they're pretending will be forgiven in the US. These are loans. These are business loans. So you're borrowing to pay these things to keep your team together, to keep people on, and then 6 months time you got to fire them all anyway because no one's going to your business anymore. Or your investment property, your commercial investment property, your tenants have slashed their floor plate, so your rent is smashed. So we're doing all we can to help. The sheer demand we are seeing means our teams are working around the clock to help as many customers as possible, and our priority right now is to get funds into accounts as quickly as we can. Of the $555 million in loans approved, 42% were for New South Wales, followed by Victoria at 27% and Queensland at 16%. Almost 1 in 5 businesses was a retail trader, followed by construction, accommodation, cafes, restaurants, and business services. This good article by Alex This is very worrying. This is very worrying. So there you go, guys. We've got one bank tightening credit to home loan applicants in tourism areas, which are these businesses here. And we've got another bank with the candy cane proudly saying how much they've lent out to these businesses. So one's reducing their risk for home loans, which is, Australia's the property bubble civilization. The other one is handing them money left, right, and centre for their businesses that are at risk. Can someone explain to me how these two things can work? Anyway, guys, it's not filling me with confidence, actually. This is probably one of the more depressing articles I've read, really, these figures. Because, just look at business confidence, guys. Are you in business, guys? Are you borrowing money to keep these things going, to pay your wages? Or are you cutting? I guess I'd just be a lot harsher. I'd just cut. I'd just fire people straight away. Rebuild. Change. But then again, I really don't like the idea of debt. Anyway, guys, thank you for watching. Please like, share, and subscribe to the channel. Let me know your thoughts and opinions in the comments below. If you're a fan and you want to support us, there are a few ways you can. You can share the video, help spread the channel. You can join us on YouTube or Patreon. You can support us via using our affiliate links at Amazon or eBay or Independent Reserve and Kucoin. Buy our merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. I'll see you next time.